Hi, this is Candice Paine from BizNews, and I am sitting with Smital Rambhai from Futuregrowth's Community Property Fund. We've spoken not so long ago describing the characteristics of the fund, but just to update you, the fund is now 2.1 billion and almost 20 years old, and specifically focuses on providing retail facilities to previously disadvantaged communities around South Africa. And the fund has done particularly well over the last very difficult year in stock markets, and so we're going to chat to Smital around where he managed to eke out those returns and how the actual communities and the facilities are going within the fund.
Thank you, Candice. Just in terms of the performance of the fund, just ending January 2016, for the 12 months, the fund returned 17.9%, whilst the listed property sector was down 2.4%. How we achieved that return, it was quite a lot of hard work from the team on the ground, very aggressive letting of spaces.
I'm sure, because that is an amazing return.
Yeah. I mean, the credit goes to the people on the ground, the team that are doing the leasing, the repairs and maintenance, the whole team as a unit, adds value to the property. As I always say, your property is only worth what your management team does with it. And we saw vacancies going down from 8.1% from the prior year down to 5.4%. In fact, we even hit almost 10% in vacancies at one stage because of the Lorraine's blowout.
Okay.
And we managed to fill up spaces, those large big box spaces, with the likes of Mr. Price and AutoZone, who require nice big spaces.
And those are good anchor tenants, so they're obviously happy with the management of the facilities.
Yeah, I mean, we've got about 86% national tenants across the portfolio, so it's quite, reputable companies that are quite well embedded within South Africa.
And are they signing long leases?
Yeah, all of the leases are between 3 and 5 years.
Okay.
I mean, if you look at your big anchors, like ShopRite and the Pick n Pays, some of them are 10 years even.
Wow.
Because they see the growth in these areas, and the trading density is in some of the anchor tenants. I mean, I look at the numbers. They twice, in some areas, twice or thrice as much as in your metropolitan areas. So it shows that the communities in which the shopping centres are, those communities are still growing at quite a pace.
And you're definitely fulfilling a need if you're able to grow your fund at 17.9% over the last year. What has been your annualized return over the last while?
It's just been over 13% since inception over the last 20 years. I think these types of assets need quite active management. It's not like your typical shopping centre in a metropolitan area where there's no social dynamics behind it. Shopping centres in townships and rural areas, you always have needs from the local community, and you need support from the local community. So we try and establish programs that will benefit the community through the shopping centre. Maybe I'll touch on that a bit later, but I just want to go back a bit to the performance. So it was the large reduction in vacancies, and we still believe that the vacancies will continue to come down from 5.4%. We've already, at the end of last year, with pre-lets, our space, because guys don't always take occupation on the date they sign the lease. It was already at 4.7%, and our target for the end of the year is about 3.5% vacancy. And we saw a large reduction in expenses. So if I look at, we entered into large national supplier contracts. So waste management service, for example, some areas we're paying 60 to 100,000 rand. Now we're paying on average 30,000 rand per shopping centre. So
it really is efficient and tight management that is coming through in the performance of your fund.
Correct. And we also managed to tap into additional source of revenue through advertising and promotions. So your corporate entities that have retail products that want to advertise, in the shopping centres on banners and even outdoor banners. Your general commodities.
Yes.
Like your washing powders and so forth. I don't want to mention any specific names, but those kind of initiatives where we've gone and tried to source additional income. We previously used to generate only about 50,000 rand per annum. Last year we generated 2.4 million rand
from internal advertising within the facilities.
Shopping centres, yeah. So and we continue trying to increase that. We believe that these shopping centres on average, the 18 shopping centres, should be doing that 2 million plus every year.
And do you have one management company managing all of the facilities around the country?
Yeah, there's a company called Capital Land Property Management. They used to run the Synergy Income Fund that was listed on the JSE, and they exclusively provide the property and asset management function to our fund at the moment.
So there are economies of scale. If they see something working in one shopping centre, they'll immediately roll it out. Correct.
Yeah, and then we also had a gradual reduction in arrears and bad debts. We actually, if I look at the reason behind that, is that there's a better collections process. Once the billings go out, we follow up with the tenants within a week if the payment's not made, and there's constant engagement with the tenant. And if the tenant's struggling, we try and get them onto payment plans. So we've managed to change that as well. And then also if I look at the leases that were signed with tenants, I mean the average escalations on the leases are around 7.7%. Which is above inflation. And also the new leases that we're signing, there's positive reversions on those rentals, which is around 3.6%.
Okay.
So there is still good growth that we're seeing. Yeah, we've also improved our property compliance. So what happens is that over time your buildings age, and to keep up to date with the latest in your occupational health and safety standards, your insurers come out and they assess your properties to see how compliant you are. I believe that our property portfolio wasn't, it was compliant to a certain extent, but we didn't exceed expectations from the insurers.
Yes.
So we embarked on our project to do a whole lot of repairs and maintenance and upgrade the compliance. And what that did was it dropped our insurance premium from 8 million to 5 million rand a year. So we've saved 3 million rand in insurance costs, and our excess went down because I think there was a perception that these shopping centres in the rural areas were dangerous and there's much higher risk.
Yes.
And our excess dropped from 5 million rand to 250,000 rand.
That's
just by increasing the compliance of the properties.
So a lot of the growth has come from efficiencies and cost cutting and better management. Where do you see the growth coming from going forward? So it's kind of two-pronged. Is there more capacity within the South African context to build more of these facilities? And within that, now that you have such a streamlined management process, how will you be able to keep up that sort of growth?
Okay, so so first of all, we are seeing opportunities come across our desk. What we're finding is that the larger listed property companies, they just keep bulking up assets and they're becoming bigger, and so they want to pay attention to the larger assets. If I look at our property portfolio, our biggest shopping centre is 40,000 squares. On average, the rest range between 10,000 and 25,000 square meters. Now, if you a big player on the JSE and you look at a 10,000 square meter property, you're not going to put in a lot of effort because on your overall portfolio, it's not going to add much to the overall returns.
Yes.
So for a company like us, that we niche managers, we on the ground, we can extract better value out of those properties. Than the larger entities.
Yes.
So we're looking to buy off those assets from the larger listed companies, and we're also finding that some properties are just generally mismanaged that are even in close proximity to our shopping centre. So we try and approach whoever the owner is to try and take over those properties so we can implement the same strategy and process around those properties.
Okay, so it is a case of small wins all over that are adding up to great performance.
Yeah. And like I said, I mean, it's all very nichely managed. We've got a portfolio manager that looks after every region. So we've got a portfolio manager through Capital Land in KZN, in Gauteng, in the Western Cape, and within his team, there's each centre manager then reports into him, and he looks after the shopping centre. So it's micromanaged, and if the portfolios grow in certain provinces, we'll add another portfolio manager, but we'll never overburden the portfolio manager with too many properties.
Okay. Let's talk, the fund is called the Community Property Fund. Let's talk a little bit around the community involvement and how that is also added to the efficient running of the centres.
Yeah. So there's areas, there's always a lot of service delivery protests in some of the areas we operate. There's many reasons, dysfunctional municipalities, promises that were made from people, and I think communities are getting fed up because even the private sector is not helping out in uplifting the communities.
Yes.
Because generally you have CSI programs where it's a donation. It's not sustainable.
And the money's not well spent.
It's not well spent, and you often find that the money disappears through some form.
Yes.
And so what we try and do is we don't try and give money away, to CSI projects. We try and do the CSI projects ourselves.
Okay.
So and where it's sustainable. So, for example, we've got school. Each shopping centre at the moment supports 2 to 3 schools in its direct close proximity, and we provide them with stationery and portable lab desks, because
Yes.
we find that these schools, many students don't have desks to sit on, and we're currently investigating chairs because we're finding there's a shortage of chairs as well. So it's trying to address what is required in those schools.
Okay.
And I don't know if I mentioned last time, we've got academic prize sponsorships as well.
Yes, you did. Yes, yeah.
And that's also, we're getting great feedback. The last letter I got was from a student at one of the schools in the Eastern Cape, and she thanked the shopping centre for paying for her full school fees because she finished top of her class.
That's amazing.
And her matric year was fully paid. And for us, 500 rand is not a lot of money, but to someone living in those communities where they're disadvantaged, 500 rand can go a long way.
Yes, absolutely.
And so we on top of that give them a voucher to spend in the shopping centre, so it could be used for school, uniforms and supplies.
So through those community projects, you are building kind of ownership and loyalty and pride in the centres and within the communities. Smital, it's been a pleasure talking to you again. Congratulations on those fantastic returns, and we'll continue watching as Futuregrowth does uplifting and life-enhancing things